Good morning, everybody, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin, from DecisionPoint.com. And we're going to show you what we're thinking about the market going into this week. I'll be looking at the sectors. We'll concentrate on a few industry groups, and then move along from there into your symbol requests. Speaking of your symbol requests, if you want to get them looked at, go ahead and use the Q&A box for your symbol requests. We especially like your questions, so feel free to ask any of the questions that have been on your mind, and use the chat box for yourself. You can talk to other people within the room if you go into chat. Just make sure if you leave a comment that you use the drop-down menu above the comment to send it to everyone. Otherwise, it just goes to Carl and I, and we don't monitor the chat box. So use the Q&A to talk to us, use the chat box to talk to everybody else. Do also want to let you know we are not financial advisors. All of your trading decisions are your own. Anything you see in the trading room, when we talk about buy points, sell points, none of those should be considered calls to action. All right, Dad, I think we're ready to jump on in. Let's go see what's going on with the market.
Okay, let's start out with this chart. You notice that I've removed the price scale and names, and take a quick guess. What are these charts of? And if you said Bitcoin and Tesla, you would be right. But which is which? I pulled this on Erin just before we started, and she guessed it right, but we look at these charts every day. The reason I did this is that they're very similar. We have this huge advance from 2020, and then we have a rounding top. They're not exact, but it's still, you can see they rally and they retreat at the same time, not necessarily the same amount, but both are failing. And what it demonstrates to me is that the amount of emotions and greed and fear coming into two things that are quite different. Although Tesla is the top chart, by the way. Bitcoin is the bottom one, and Tesla is it's a lot like Bitcoin in the terms that it's been bid up to impossible prices, and PE, I think it's around 70 right now. And we'll check that later. But at least there's an actual company behind it, and they make things. Bitcoin, there's nothing there. And as we learned last week, it's a little more shaky than anybody thought right now. I don't know how an exchange fails, but obviously it's not closely regulated, and it's really made people think about their commitment to Bitcoin and all the cryptos. And right now they're contemplating whether they should get out with what they have, as opposed to, that was that exchange FTX was in the billions of dollars it was worth, and it went from billions of dollars to zero. So it's just something to keep in mind. Okay, let me go to another chart here. Starting out with the market, the SPY had a really great week last week. We thought it was going to break down on Wednesday, But on Thursday, Thursday and Friday, it rallied very nicely. I think it's up about 13% from the low here. That's certainly a good start on a longer term rally. I'm just guesstimating here, maybe another 2 to 4 weeks for this rally before we start running into trouble. Notice today we've got the 20 exponential average crossing the 50 exponential average to the upside. And we don't know if that's going to hold until the close, but it probably will. And so that's a intermediate term trend model buy signal. It's also, we call it a silver cross. Let's go and look at some of the indicators. I wanted to see the bias assessment. Here we have the silver cross and golden cross indexes, excuse me, in their components. Notice that the stocks above their 20 and above their 50, that's the percentage of stocks in that condition, are really at the top of their range, which in a bear market has meant that we'll have a pullback. So would be watching out for that. Obviously, here's an area where it got up to overbought and it stayed there for a long time. So we could, that was the last nice rally we had during the bear market. So maybe we'll see the same result here. Primary indicators, Swenlin trading oscillator for breadth and for volume, they are approaching overbought, and the intermediate term indicators, intermediate term breadth momentum and volume momentum, and they are mid-range, at least compared to this last overbought reading. But we're getting in an area where this could be overbought. It could be enough for this particular little short cycle here. Anyway, we'll just keep an eye on it. Okay, moving to the 4. The dollar, as you can see, is off of its high, and it's really been in distress. We're looking at a neutral signal, the 20 EMA crossing the 50 EMA down to the downside, which is a dark cross in our vernacular. And so again, if everything holds, we'll be getting a new signal there at the close. With dollar doing so badly, gold is doing really well, and we'd like to see that. And gold, GLD, is on the verge of a new intermediate term trend model buy signal, a silver cross. Crude oil, USO, basically been moving sideways, although from this low, we have got a rising trend. We have a top above a top and another top above the top, a bottom above a bottom. The treasuries, this is a 20-year plus treasury bond, ETF, and their treasuries are rallying. And don't know how long this will last, but let's see. You notice that we've had a sharp drop in the yield. This is as of Friday. This is an end of day update chart. So you can see we've really shifted gears here. So obviously we're going to be going down for a period. But I think long term, this is the belief that the Fed is going to suddenly wake up and discover we don't need to lower interest rates, and raise interest rates anymore. Maybe they'll decide to lower them. Ha ha. The dynamic yield curve, I haven't shown this chart before, but this is on StockCharts.com. And the yield curve is inverted. You notice the 2-year is higher yield than the 20-year, and the 30-year for that matter. And that's not a good thing. We had a similar situation at this top in 2000, 2001, and we didn't have that situation here. If let's just take a look, you can see yield was not the issue. Well, there it was. It was inverted. I missed that earlier, but as we got to the top, it straightened itself out. But here it was this is basically all periods. Shorter periods are higher than the longest. Okay, and the 10-year yield, we keep an eye on that. It obviously did have a bad week last week. Excuse me. We may have found the bottom because we're getting a bounce today on that. And then again with the Bitcoin over the weekend, this is the day, the green line there, but this is Sunday and this is Saturday. So it was trading down over the weekend. But this is where the exchange failed, the FTX exchange, and very bad for cryptos in general. Let's take a look at the large cap tech stocks. They were responsible they led the rally last week, and because they've been beaten down pretty well. Apple is the best looking of them all. It's kind of in a sideways consolidation, although notice we had from the all-time high, almost a 30% decline to this low. We have a low beneath the low, beneath the low. And so that is a declining tops line. But this decline, it didn't go below this. So we're starting to get a little bit better looking. All I can say for that. Amazon, it's really been stressed. A 55% decline from its all-time high. Now I've stretched these charts out to 18 months, and because the all-time highs of drifting off the 1-year chart. But we don't know that Amazon's finished going down, although we're getting a bounce off of this low. Google also rallying. It's down 45% at this low. Meta Platforms actually is doing fairly well. We have a gap, and it's in the process of filling that gap. Let me look. It doesn't look like a lot, but it basically from here to there is a 32% rally. So that's pretty healthy. It may get stopped when that gap is filled. Don't know. And we're still in a situation where this is an island, and we could get an island reversal out of this. But it's looking fairly decent. Microsoft also down 39% from its all-time high to this low. So we're bouncing off that low, and these big tech stocks are leading the current rally. Netflix, credit where credit is due. We're watching the 5th season of The Crown, which I think is a pretty good series, although I'm not a Royals watcher, but it's, I could say I'm not crazy about a lot of their stuff, but that was a good one. And it is up. Let's see, off its low. It's doing really, really well, up to an 89% advance from this low.
Wow. I didn't realize it had gone up that much.
Yeah, it didn't look like it right offhand, but it's going to have to rally 330% roughly to get back to its all-time high. So it's got a long way to go.
Good start, though.
NVIDIA also doing well. Let's see. That's 52% advance. It's down 70%, so it's got some catching up to do. And I think that'll do it for the stuff I'm going to cover. Let's take a look at see if there are any questions that we need to answer before you get off your stuff. I'm not
Well,
seeing.
there was, let's see, Fernando asks if we trade options when the market is too volatile. And I will say both of us really don't follow options. We really don't do options. So really couldn't, I have to say no to that question.
Right. I don't do options anymore. When I started out, I was really, really smart guy. I knew everything, and I traded options and lost our life savings at that point in time. So I don't do them anymore. And I'm not saying you can't make money at it, but they're too fast for me.
Right. And I have to say, watching that from the sidelines pretty much kept me out of options as well.
Right.
So
She's learned a lot from her dad.
I have. That was one, definitely. Linda asks, why is gold going up if inflation is under control?
I don't think it has anything to do with inflation. It has to do with, as I pointed out earlier, that the dollar is failing right now. And also, I think a lot of money that would have gone into gold went into cryptos. So I think that came to a screeching halt last week. And so there's that. But the dollar, let's go back to the UUP chart. The dollar is really on its way down right now. And let's see, 7% off, whereas gold approximately very close to 10% from its low. So that means that gold is doing even better than it should be doing based on how the dollar has declined. All things being equal, gold should go up or down based on the opposite of what the dollar does. And right now we've got more interest in gold itself, so it's trading up on its own, besides what's going on with the dollar.
All right, so I saw that one. What else did we have? I'm looking. Okay, somebody had asked what the symbols were for new highs, new lows on the NYSE. I am typing that in as we speak. But you would use exclamation point, new, NEW, high, HI, and then NYA. And that would give you new highs for the New York Stock Exchange. And then similarly, it would be exclamation point, new low, LO, NYA. And that's going to give you the new highs and new lows for the New York Stock Exchange. So type that answer in. So hopefully you guys will be able to see that in the Q&A area. What else?
Okay.
Oh, go ahead.
Yeah. Is it possible to look at a currency? Could you please look at the sterling versus the dollar? I don't know what the sterling symbol is.
Yeah, I'll have to look under currency somewhere. I think if we type in into the search box.
Why don't you take it?
All right. So what we might want to do here is the pound, British pound to the dollar. This is one of the nice ways you can search for stuff when you need it. I can see it to the Swiss. Where is it to the US dollar pound? There we go. Looks like it might be the opposite way. Does that look right to you, Dad? I can't tell what.
It looks like the dollar. Basically, it's
Yeah.
showing the USD in pounds. So the dollar is falling based on what the pound, based on the pound. So
Let's see. So
you're getting stronger. Let's put it that way.
And then another question, financial media is very bullish now as the yields came down a bit on TNX, but the entire yield curve has moved higher. In 2019, 2020, before the pandemic, the yield curve was flat to slightly inverted, but now the entire curve is close to 4%. Overall interest rates have to move higher. So I'm not sure that was actually a question. It looks like more of a statement, but yes, I mean, the market loves it when the yields start to move lower. It's something that I think helped fuel last week's rally. Let me see if I can get to our yield array here, back to there. So this big decline last week, I think, really helped the market along, got that rally, kept the fuel going as well as the declining dollar. So, overall, I know that I believe, and I believe that you do, think that interest rates will end up going higher and make new multi-year highs. It's just a matter of, it went too far, too fast. And now it's time to kind of digest that rally. But I would expect when it hits those highs from back in June, that would be a pretty good place to see those yields turn back up. The island effect, that was the other question. I believe it's on UUP. So this is actually not the best example because UUP gaps all the time, but it'll at least give you an idea of what we look for when we talk about reverse islands. So they're typically reversal patterns. And what you'll see are these big moves here. This is a pretty good example. Let's see if we can get back up to the candle here. So you can see that we got, let's see here, there's an island right there on that breakout. So I don't know that, I think I talked about that in the DP alert, but like I said, with UUP, it tends to gap a lot. So we don't make too many sweeping conclusions when it does gap. But basically an island is a gap up, and then it'll form either one candle or a couple of bars, but they stay up above that gap. And then what'll happen is you'll get the gap down reversal. So you end up with this little island. And so the idea is that you get the big gap up and then you get a gap down and see prices move lower from there. So we do pay attention to those islands, but you unfortunately, just like with gaps, you don't know if it's actually the formation until after it happens. So it's not always that helpful, but at least it's an attention flag and tells you maybe you should be looking at it. All right. Did we have any others? I think that's pretty much.
What are the leading stocks in the Dow 30? I don't know how to answer that.
I saw that question and I actually prepared the answer.
Good for you.
Yes. So here is, I actually just did a quick scan so that I could get all of the Dow 30. I put it in a candle glance just so we can get a peek at what the stronger stocks are. So there are a couple of ways we can look at this, but I would go by the PMO mostly. If you see something that I don't see, Dad, just feel free to speak up. But what I like to look for is new momentum. So I'm looking for things like this with Salesforce.com, where you get that quick reversal. and then you start to see that PMO moving up. But you also have to do a little bit of a look at price as well. And you can see that we have overhead resistance coming in. We have a low over here that is lower than the prior low. So there's a couple of things going on that chart that we don't like. But new momentum showing on Apple right now, very similar look. And if we go through, you can see the strongest stocks are Boeing, Caterpillar, all of these that really had these breakaway gaps and just that move higher. And you can see the strength in what the PMO is doing. We just have to be careful, because if you get that PMO up here and overbought, then you kind of have to step back and say, okay, is this the end of the move, or are we just digesting the move? I would say when I look at Cisco, I think it's more of a digestion period, but PMO is getting overbought. Love the look of Chevron here, where you have that bottom on the PMO above the signal line and a breakout. So I would say Chevron's looking particularly good.
The PMO definitely is one way to sort and see who's the strongest. But how about the SCTR? Can you sort on that?
Oh, the scooter, adding that. I can do that, but it might take a moment because I have to add it to my candle glance style. But that's actually a pretty good idea. Let's see. Well, this is going to be this would be a good way to instruct a little bit here. So what I'm going to do is click on, right now I'm just clicking on XLY. But what I want to do is I need to go to my candle glance chart style, which is under the chart styles right over. Okay, so we want to change the chart style to my candle glance one. And so this is what I want on a candle glance. And so I take this and I add the scooter. And I want that below, so I'm going to update it. And so now what I do is I save this chart style. I'm going to say replace my candle glance. All right, so that's my new candle glance. So when we come over here and I will refresh this, we have the scooter now on our candle glance. So that is very helpful. The scooter is the StockCharts technical rank. It gives you an idea of where the stock lies within its universe. In the case of the Dow 30, the large caps. And so this tells you that based on trending condition, comparing all of that against all of the large caps, that's the percentage it lies in. So a 22.9 or a 23% scooter means that it's in the bottom quarter of all stocks within that particular universe of large caps. So hopefully that made some sense there. So getting new momentum is great, but we do want to see that scooter moving higher. You can also check on it and see, okay, is the strength still in Caterpillar? Is the strength still going on in Boeing? This is why I think Chevron looks particularly interesting with that bottom above the signal line on the PMO. PMO is overbought. I'm going to say that right now. But the fact that we have a nice scooter that's above 75, that tells you you've got the top quarter amongst all the large caps on Chevron. I think that's looking pretty good. I haven't been really thrilled with the oil chart, but all of energy hasn't really been paying that much of attention to what's happening in crude oil. All right, do any of these catch your eye? I would say Johnson & Johnson looking very weak here with a double top. Looks like it's trying to bounce here and prevent that double top from actually executing and getting us to the minimum downside target. But the strength, to me, the new strength lies. Let's see, where are some PMOs? There's another bottom above the signal line here for Visa. A little overbought on that PMO, but not completely, because you can see we've gotten some -2, -4 readings. So it could certainly rise to that +2, +4 area. Scooter is a little bit not looking that great, but overall, if we go simply by scooter, you've got Merck looking very strong, but notice the PMO is topping. So you can't really say that that's a leader at this point. Microsoft, I think, looks good. I like the software space, and we will talk about that shortly. Any of these catching your eye, though, Dad?
No, but I thought I'd mentioned that the PMO is really a good way to sort for strength, but you have to be careful with it. You can have a stock that's got to the top of its range on the PMO, and it could, and then could start down. The PMO would still be reading a high reading, but it also could be moving down, which would, you need to make sure that all the PMOs that you're comparing are going up.
So I know my candle glance style just changed, but if you go to the defaults with your timing, so I went to a 6-month, and the indicator that I have on here is the PMO. This is what we use as our regular parameters. And then I sorted it by descending. So these are the highest PMO rankings, or the highest readings. So these are really, your top high momentum movers. You can see these rallies that have been in process now for quite some time, but you can get an idea just by sorting on relative strength on the PMO. That's another way that you can look to see which ones are the strongest. So Procter & Gamble looking very interesting to me on this rally, but the problem is, like I said, with some of these, the rally has gotten pretty extended. Intel looking very interesting, actually. We've got that silver cross, it looks like coming together, although that I think are regular moving averages. Yep. So these are the EMAs, but really nice look here on Intel. I have to say, the only issue I would have is that relative strength is starting to fail a bit there. So I think we've done our walk through the Dow, and we've given you some ideas on how you can, go through there and, change your candle glance, look at, certain things that you find the most interesting. So I'm going to move us into our sector overview.
Okay.
And I'll let you gather some of those symbol requests and get those ready. So now I want to go back to my custom style. So I'm going to do that here. All right. So we have the PMO and the scooter on my candle glance currently. I probably will switch it back, but maybe not. I kind of like this look. So let's look for that new momentum. Let's look for where the strength lies. So I would say, looking at these, at least all of the PMOs are pretty much rising. You can see healthcare was a little bit hesitant here, but it's now starting to rise nicely. Comm services really making a comeback. We looked at the Netflix chart. I have a feeling that's part of the major reason we're seeing comm services do well. And I think there's a rebound going on in Facebook currently. I love discretionary's look, double bottom, hasn't quite confirmed yet. It needs to break above the confirmation line, which would be right there for that double bottom. But you can see a switch, as we were talking about, I can't remember which one in the Dow 30, but we have that whipsaw buy signal in oversold territory. I think discretionary is starting to look very interesting. Staples is doing its nice move here, had a breakout. Looks like we're getting a continuation. And then there's that bottom above the signal line. This looks like the Chevron chart, but of course, these are capitalized as far as the sectors go. And so if you buy XLE, you better like Exxon and you better like Chevron. All right, financials still looking good, topping here at overhead resistance. Like I said, healthcare looking a little bit suspect as it gets near its overhead resistance. But overall, I think when I'm looking at new momentum, I'm looking for breakouts. I do really like the look here of technology and discretionary. So let's concentrate on those two this morning or afternoon, depending on when you're watching this. So XLY, Still in somewhat of a trading range here, but as I said, I noticed that double bottom coming in, new momentum on the PMO, RSI is positive, but this is really where all of the action is in participation, seeing how the stocks within consumer discretionary are performing. And you can see that we have some great participation going on under the surface. Nearly every stock has their price above the 20 and 50, which is impressive when you look at the actual sector itself. Because notice it's only above its 20-day EMA. It has not gotten above the 50-day EMA. So this tells me with all of that strength underneath the surface that we should see a breakout here for XLY. It's showing some great internal strength. The Silver Cross Index is moving higher. Golden Cross Index actually bottomed above its signal line. So I think that consumer discretionary has a lot of interesting opportunities, if you will. Stochastics rising. And you can see relative strength, at least at the end of last week, really started to improve against the S&P. And then I said we would look at technology, where we have some new momentum on this bottom above the signal line. Also, you can see the PMO just now reaching positive territory. We have a breakout that occurred Friday, a little bit of digestion going on today. Doesn't look like indigestion at this point. You can see that the RSI is positive. And again, when we look underneath the surface, some really great participation. Not quite as good, really, when you think about it in comparison to discretionary, though. When I look under the surface, might have a little bit more growth to go because we have lower readings here on the percent of stocks above their 50-day EMA. But overall, Silver Cross rising strongly. The Golden Cross is above its signal line and rising mostly. So I'm thinking technology also looks very promising. So now what we need to do is drill down a little bit and find out, well, where exactly is that strength coming from within that sector? And so that's when I go to my trusty industry group summary here on StockCharts.com. And we are going to go down to technology and discretionary. So here's discretionary right off the top here. Nice breakout, as I said. So this is auto parts. Really nice breakout going on. Stochastics above 80. The only issue is really with some of these is being overbought. And we can see, though, that with the auto parts, you do have the PMO down here at -5, which means it could accommodate a move up to +5. So liking auto parts, autos not so much. If you're in discretionary, autos is probably not where you would want to be. This looks pretty good with business training, but it hit overhead resistance, pulling back down. But still indicators under the surface looking pretty good. Gambling really has made a move. I think they know I'm getting ready to go to Las Vegas, so everybody's excited. You can see the gambling. We got the breakout above the 200-day EMA on Friday, and look at the continuation we're seeing here in the gambling space. Clothing and accessories hitting overhead resistance, so not quite as bullish as some of these others. Specialized consumer services are getting overbought. Furnishings, nice gap up move, Silver Cross on the way. So furnishings looking very interesting, but again, hitting the overhead resistance at this top from September, as well as the 200-day EMA. It might have some consolidation it needs to go through before it takes off. Footwear looking pretty good. Same situation, though, as furnishings. Home construction had a nice breakout on Thursday, pulling back as you would expect toward the breakout point at the 200-day EMA. Nice little look here on durable household products, like this almost vertically rising PMO. Stochastics just now getting above 80, and that breakout above the 50, and this little pause today does look quite enticing. Home improvement retailers looking good. Hotels breakout, but not breaking out above August tops. Apparel retailers looking pretty good. And let's look further down, broadline. There's a lot of these industry groups within discretionary, so I don't want to take too much time. Recreational products looking good, recreational services, silver cross, but not quite above the 200-day EMA. Love the breakout here on specialty retailers. We have that PMO bottom above the signal line. With this breakout above both of these tops, I think that specialty retailers look particularly interesting. Restaurants and bars are already having the breakout, still looking strong. If you have those stocks, probably a hold is in order. Travel tourism, mostly sideways. Toys trying to recover, but I'm not thrilled with that chart. And tires, similar situation. Things are improving. We have some new momentum and a possible double bottom, but still a little early in that move. So let's go down to technology, and I'll finish looking at those industry groups, and then we will go ahead and move right on into your symbol requests. All right, electronic equipment looking pretty good. Again, you're seeing these very extended PMOs, but we are enjoying a bear market rally, so it's not surprising. But we do want to try and find those PMOs that maybe aren't as overbought as we're seeing here on electronic equipment, but great breakout above the 200-day, digesting that move today. You can see the double bottom here on the computer hardware space, breakout above the 50, consolidating that move. We want to see it get above this confirmation line at the top for, looks like October. New momentum coming back in, nice on the way. Stochastics is rising, so computer hardware looking interesting. Telecom mostly consolidating right now, not a place I would necessarily want to look for new positions. Computer services looking pretty good, but we are getting overbought and overhead resistance is arriving. Electrical components, very similar look, but I catch here a reverse head and shoulders, possibly, if nothing else, a nice bottoming, basing type of foundation here. PMO not overbought, moving higher here, even on the day for electrical components and equipment, looking interesting. Semiconductors broke out in a big way last week, and it looks like they are continuing higher, up over 0.75% currently. So semis, I think, look good. And I know a lot of subscribers are in semis right now on DecisionPoint diamonds. I think they still look great. Software is a place that I was expecting a lot of movement this week. Looks like it's pulling back after hitting overhead resistance. So maybe semiconductors looking a little bit stronger, but we do have kind of this double, triple bottom-ish look. Kind of messy. If you want to go triple bottom, it should really go all the way down here. But nonetheless, we still can see a double bottom hitting the confirmation line and turning back down on software, but still staying above the 50-day EMA after that breakout last week. So I think software still looks enticing with that PMO moving almost vertically higher and stochastics above 80. I've been a fan of renewable energy. Looks like it is consolidating this giant move to the upside. And I'm telling you, this is giant. Let's look here at where we are from just the low that we had recently back here in October to where it is trading now. Let's see, I've got my Q&A box in the way. So let me see if I can get a better look at this. So currently from that low, it is up over 30%. On renewables. Looks like we could be getting a double top here, though. So be very careful with those renewable positions. They do tend to be volatile, but this looks like an area where we could get another rebound on renewable energy. But I still think software semiconductors tend to be, looks like the leadership for technology. All right, that completes the look of the sectors. We went through the Dow to answer our question from earlier. But now it is time to race on through those symbol requests that you have. So where are we starting, Dad?
David wants to know the symbol for the yield curve. And there really is not a symbol. You show how it's on the dashboard. And it's a link on your dashboard on the StockCharts. And it's the dynamic yield curve. There it is.
Yeah, it's dynamic because as Carl was doing it, you can see you can bring it in, just drag this red line. And so it gives you an idea of kind of where the curve was before the drops, at the bottoms where it was. Pretty interesting to be able to just click through and drag.
Okay, how about NS, November Sierra?
Okay. Nice breakout here. It is pulling back after that breakout. This worries me. The PMO is beginning to top. And really, when you get in on moves, particularly if you can get fortunate enough to get on early moves, when you start to see that PMO topping, that's typically when you want to get out. So I'd be very careful here. The support level at the August top, but really this support level at that June top would be kind of my, let me get rid of this area. So that's about a 2.5% decline. So probably a nice tight stop would protect you there. Just because the PMO is starting to top, I'd be a little bit careful there. And you could see relative strength starting to taper off as well here for New Star Energy.
PYPL.
PayPal. I think a couple of people asked for this one. So we'll look at a weekly as well. All right. I can see why everybody is interested in this one. I was thinking this might be a descending wedge, but it seems to be opening up more into a broadening pattern, which we don't really want to see. I really like to see the breakout here, but nice move. PMO just giving us that crossover. Would have been nice to get in here a little bit closer to that PMO bottom, but we're really not that far from when that trigger happened. Relative strength looking good. I think PayPal looks pretty good on a daily chart. Let's take a peek at it on the weekly. All right, and there you go. You can see that bottom above the signal line on the weekly PMO, and it is rising. This support level, very, very long-term support, is holding off of this decline. And one of the things I like seeing this bounce, it's occurring before actually having to go down and touch this support level. So typically when you get those reversals like that, you're going to see some follow through. Weekly RSI not looking that great, but I think PayPal looks pretty good. A quick look at the 5-minute chart as far as entries and exits go. On a 5-minute chart, when you're thinking about entering, you want to see that PMO crossover combined with a positive RSI. If you're coming to the chart and you want to sell it, just look for that PMO to start turning over, which is exactly what it's doing now. So this would be a pretty good sell point on the 5-minute chart. The buy point, you really want to start seeing that PMO turning back up before you'd consider a buy point.
AWR.
AWR. American States Water. So utilities. Utilities have had a pretty good run after bottoming, and water itself has been looking pretty good. You can see that nice big breakout, pullback to give us the pullback to the breakout space. And then now we're getting that reversal to the upside after the test of this area of now support. PMO is getting a little on the overbought side, but overall, I mean, I think this one looks pretty good on that, that pullback and then reversal. So liking that move. It is a bit of a big move today. So quickly looking at that 5-minute chart, you want to wait, I think, for a better entry as you've got that PMO crossover sell signal on that 5-minute chart.
PACB. PACB. Papa Alpha Charlie Bravo.
There we go. I know, get our military lingo in there. Oh, nice look. I'm liking this chart. PMO is a little extended. but relative strength looks great against the groups looking good. The symbol is looking good, and the symbol to its industry group is also looking good. So you have a stock with some leadership in the biotech space. I'm liking the look of this one. The RSI is a little on the overbought side. Whether we'll get to, let's see here, we can get back to this intraday high looking like Martin Pring. I don't know if you've ever heard, Dad. Martin Pring calls these moves like this a Pinocchio bar. So a lot of times they're telling you something that really isn't there. So you can see that big intraday move. We did have another day, but then you ended up getting that decline. So I still think that, you have an opportunity to start testing this area just based on how the action's going on this chart. I do like PACB. Quick look here at, gosh, everything's in the way here. Quick look at the weekly chart, weekly PMO now in positive territory. Scooter tells us top 90, top 2% in the biotech, in the small cap space. So if you're going small caps, this looks like a pretty powerful one.
Okay, NXST.
All right, Next Star Media Group. See a nice bottom here coming up, though, hitting overhead resistance at the 200-day EMA. So far, not slowing down. Looking like some interesting, it's like a double dividend here that I think that's a incorrect bar, but PMO starting to rise. I love the new momentum here. I love that stochastics are moving higher. This is the RSI isn't quite positive. So this one would be kind of risky to enter right now, just because we don't have confirmations by some of these indicators. But really, if you want to get into new momentum and new move, this is looking pretty good. Personally, I like to see the breakout, a little bit more confirmation here, but depending on your risk appetite, not looking too bad here. And it is in comm services, which was one of the other sectors that we were looking at that looked pretty interesting. PMO on the weekly chart, not looking that encouraging, nor the weekly RSI, but you can see a bounce here coming off this support level. Looks like really this is the strongest support level down here, though, near that 2020 top, these lows. So it's still kind of vulnerable to a move down toward that support level. But if we get the follow through on this rally, that would be great because it would have reversed before testing that support level. So liking the look of Nexstar.
Okay, ATIF.
Okay, financial asset managers. This is a really, really, really low volume stock. So I would just be aware of that. I tend to stay away from something that has this low of volatility. This low of average daily volume. The average daily volume is 5,000. That's not usually the best investment to get involved in. PMO, though, on a buy signal. I love the way stochastics turning up in positive territory. So we're just going by the technicals. RSI is still negative. I think you need a breakout here. Everything looks like it should start to go the right way. PMO is rising a little bit here as price is consolidating, but I think you need a breakout on this chart before you want to get into it. And that would imply that we'd be seeing in a positive RSI by that point in time. But notice relative strength, I don't know.
This is a good example of the PMO rising, and it's only it's not because it's getting stronger, it's because price has gone flat and the PMO is moving back to the zero line.
Excellent. Yes, okay. Exactly.
We have a request for Tesla.
Oh, okay. Well, we'll look at it quickly. I know you had a peek at it earlier. Right now it's sitting on support levels that we have to go to a weekly chart to look at. So it is pretty beat down. It lost this very important level of support at those 2022 lows earlier, making new lows for the new 52-week lows. Not a good sign. We've had split after split. Tend to see price not do well after these. Didn't hurt it back here, but it's starting to hurt it back here for that next diluting of that particular stock. Not liking that weekly chart. The next level of support really is where it is bouncing though. So I can see the interest level and why that would be interesting to you. But boy, you're taking a big chance here. Weekly PMO now in negative territory. Scooter is only at 3. I mean, I'm not particularly happy with the look of this chart.
Long-term rounded top there. It's just not healthy looking. And, people are getting more realistic about expectations there.
Right. And you were talking about the yield, or the PE currently reading at almost 60. So it's still pretty overbought.
2 minutes left. AWR.
AWR, another water stock, so I won't get too involved in it. But again, breakout, pullback, moving back up. Those are things you want to see. So AWR is looking pretty good moving forward. So I can just skip right on through.
Okay, DLTR.
Dollar Tree. Nice move here. The rally is still continuing. PMO not quite overbought. We've certainly seen higher levels. Stochastics of oscillating above 80. These are all the things I want to see. It is starting to underperform its group just a little bit, but overall it's really doing well against the S&P. Overhead resistance arriving, but still looking pretty strong in discretionary and specialty retailers. In particular, remember we looked at that industry group, looked very good.
Shooting star today.
Oh, indeed. So the candlestick, by seeing that long wick, and if it closes near the bottom, that would indicate a possible decline going into tomorrow. So definitely a good catch there. Thanks, Dad.
Okay, got 45 seconds. AMBC.
AM.
Yeah, AMBC.
Awesome. Ambac Financial. This is a insurance, property casualty. Everything going well on this chart. I like this. The PMO starting to accelerate higher. The only issue we have right now is that overhead resistance level. But given the positive look of these indicators, I would expect a breakout to be coming in on this particular one. So not looking too bad, but might need that confirmation before hopping in, or just have a nice tight stop.
Okie doke.
All right, we hopped on through. Sorry if we did not get to your symbol requests. We had a great question about the Dow today, so I felt like we needed a little more time on that. Thank you again for joining us here. You will find the recordings on our YouTube playlist, and it will be going up at 3 p.m. Eastern for those of you who are live with us. I think that's pretty much all I have. So good luck and good trading, and we will see you next week on the Decision Point Trading Room.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.